Welcome to Metatech Podcast, the community of experts for the Metaverse, Web 3.0, and NFTs. Learn and be inspired by top industry leaders with your host, Ricardo Carreon. Together, we are building the Internet of Tomorrow. We invite you to join the Metatech experts community on LinkedIn, Twitter, and Discord.
All right. So welcome, everybody. This is Ricardo Carreon, and I'm your host for the Metatech podcast. I'm joined here today with my co-host, Wendy Lopez. And we have hello, Wendy. And we have a very special guest with us, Shane Smitas. He can talk to us about a lot of the things that are happening with the regulatory space and with the financing space. So welcome to the show, Shane.
Excellent. Thank you very much. Very happy to be here.
Tell us a little bit about yourself. What have you done prior to your Web3 life, and what are you doing on Web3?
Sure. Yeah. So my business background is in business, sales and marketing. And about 10 years ago is when I got involved in blockchain and started building in mobile payments. We created a product. Well, at the time, mobile payments was, we're just starting to get off the ground. There was no Apple Pay, no Google Pay, anything like that. And so the industry was really very young, and it became clear that the missing link wasn't so much in the infrastructure that Apple and Google were going to provide and Visa was already providing, but was on the point of sale side. So we started to develop a point of sale terminal to accept payments through a phone. And so that was how I got involved in blockchain.
All right, so you came through the mobile payments area, and I assume that today there's a lot of people that are kind of like intersecting fiat mobile payments with crypto mobile payments. There were some news this week about Brazil regulating for accepting Bitcoin as a payment method. So yeah, there's a bunch of things happening in several markets where mobile payments are also becoming crypto payments, right?
Absolutely. It's the whole world is just starting to get into this and integrate
Ricardo, are you okay?
I'm fine. I just went into limbo. The problem is that I don't know if that piece was recorded. So
No. It was good. I was about to ask Shane something in the meantime that you were on freeze, but you want to keep go ahead, or I keep
yeah.
Again?
Let's do your question, and then we'll have to have Diego to edit this because it's gonna be kind of like a blimp there. I had kind of like a blimp in the internet, so I got kind of like kicked out. Mm-hmm.
But it was recorded. Okay, so Shane, I was asking about what are the challenges like to adapt like payments through phone with crypto. What are, in your opinion, those challenges in the coming future?
Well, I mean, infrastructure-wise is the first challenge, and you have legacy players like Visa and MasterCard and other payment protocols that want to hold on to their monopoly basically. So that's the first the first challenge, and we saw that very early on with mobile phone companies. They created, a mobile app for payments. I mean, this was 10 years ago now, and they did everything they could to block Google and Apple from coming in and offering payments on the phones. And so this is what I see as the big hurdle to overcome is legacy players want to protect what they already have and what blockchain can ultimately replace. So that's kind of the first thing. The second thing is educating people on how to use cryptocurrencies and digital wallets, because especially with things that are going on today, like with FTX and BlockFi and all these challenges, people are rightfully concerned and scared and don't know how to host their own wallets and that kind of thing. So education is definitely a big thing.
And Shane, do you see also the need to have kind of like on and off ramps through local currencies that are kind of like very easy and transparent, so people don't have to really be concerned about when they buy or sell crypto? They just kind of like do it on their own favorite wallet vendor?
Yeah, absolutely. I mean, and that's coming. I mean, we're hearing thoughts of or word about central bank digital currencies, and central banks, they want this to be able to keep a tighter control over money flow. And but they're going to do that by giving people the assurance that the digital currency you're using is actually the Mexican peso, but just digitalized, or a Canadian dollar, but digitalized. And so that's kind of the on and off ramps are going to be made easier by central banks, really issuing these digital currencies.
And where do you see regulation going on the fallout of FTX? Where do you see this going in the major countries? What's going to be the fallout, the impact of the FTX meltdown?
In my opinion, the fact is there are already regulations in place, and a lot of people talk about new regulations coming and that kind of thing, and I don't believe that there's going to be any major structural changes to the current regulations. I mean, the fact is that FTX didn't use those regulations, and there was FTX International and FTX US, and FTX US, from what I understand, is still whole. But it was the international space where they were dipping into user funds and doing all these things. So what this is going to do is it's going to show the industry that regulations that are there, to protect investors, they work, because in the U.S., things were handled properly, but it was the international side that weren't, operating with regulations, that had the issues. So in my opinion, they're, going to reinforce the existing regulations that are there already. And that's exactly what we're doing with RevTap is we use, the existing landscape or the existing regulations for what's called exempt offerings. So offerings that are not, publicly traded on stock markets. We go through the regulatory process and we do that. And, that just shows investors that, you can invest and understand that it is all being watched by, an authority.
So what you're saying is that in your project, you're taking, assets and putting them on the Web3 space, but, making sure that they are, kind of like compliant and they have governance built in. Is that correct?
Yeah, it's exactly right. And, right now there are regulations in place for securitizing anything. So anything that basically gives the promise of an increase in value in the future is essentially a security. So if you're selling digital artwork and you're telling investors that, in the future, this should be worth more, that's a security. And there are, regulations in place, for that, things you need to do to be in compliance with those regulations. And that's exactly what we do. Is every company that comes on to our platform and sells shares in their future revenues, goes through the approval process with the SEC first and becomes regulated under one of the current exempt offering regulations.
And do you see this becoming kind of like is some sort of tokenization of all kinds of assets? So, from, let's say, real estate to even intangible assets or complete 100% digital assets that, might be relevant in a particular metaverse or in a particular digital environment. Do you see that as kind of like the future for those types of securities?
Absolutely. And we already see it. There are companies out there like Otis and Collectibles that are selling securitized shares in collections. So, Otis does baseball cards and collectibles like comic books and that kind of thing. And you could buy, 1/100th of a share of, the very first Batman or Spider-Man or whatever comic book. And they use the exact same exempt offering regulations. So, what these rules basically say is that, if you want to become a publicly traded company and go on to an exchange like the NASDAQ, for example, you have a very high number of compliance regulations that you need to follow. But there are companies that don't necessarily want to go public, but still want to be able to sell shares of their securities. And then those are called exempt offerings, and those are typically done for private markets. So there's public markets and private markets. Private markets actually account for about twice the volume of public markets. So these exempt offerings right now account for about $3.2 trillion a year just in the US. Public markets are about half of that, about 1.7 trillion. So all these companies that are entering into the Web3 space, we are all using these same regulations, to securitize tangible or intangible assets, whether it's real estate, or bonds or shares in gold and that kind of thing, or digital assets like artwork.
Right. But do you see that also? Do you see kind of like ICOs or NFTs also being used that way, or do you think it's going to be another type of instrument? Because I mean, at some point with the bear market, there are not that many ICOs or large NFT collections being launched. So where do you see? Is that still going to be an option in the future, or what kind of instrument do you see for startups to do that financing?
Well, we're the first platform to do securitized shares in revenues. So as far as ICOs go, what we are doing is essentially, it's very similar to an ICO. A company, with the ICOs of 2017, what they were doing is they were saying, we'll issue a token and you could have a share of our future revenues or a share of revenues from a specific product, or early access to our platform and that kind of thing. But they weren't doing it with any regulatory oversight, and that's what happened. Was the SEC stepped in and said this is enough, and that's the reason why we don't see a lot of ICOs anymore. But what we're doing is basically doing a regulated approach to initial coin offerings. So giving companies a platform where they can, in a regulated way, sell shares in their revenues to investors. So yes, I do see this as, the direction that Web3 companies are going. And, whenever anybody is securitizing anything, they're going to use these regulations.
So it's going to be more, as you said, this is private market, and it's using this exempt figure that you talked about, right?
Exactly. Yeah.
Okay. So whether there is a coin or an NFT or something kind of like in the infrastructure piece of it, but the important thing is that they are compliant with these regulations.
Yeah, if you're promising future value, if you're selling something that if you're just an artist and you're selling a digital artwork and that's the end of the transaction, there's no there's no need to go through the SEC because you're not selling anything promising future value. But if you're selling an artwork or a series of artwork that you're promising or implying that is going to increase in value, that's when you become a security. And that's when you would go through these exempt offering regulations. So whether it's digital or tangible, it all goes through these same regulations. So when people say there's going to be an influx of new regulations because of FTX, we say it's probably going to be just enforcement of existing regulations.
Yeah, and what you're saying is very interesting because there's another fallout that's not as not as talked about as FTX, but it's Rally. Rally was this platform that had, hundreds of, no, probably thousands of creator coins, right? I mean, there were a bunch of creators that had their own coins, and this was kind of like being presented as some sort of a way of providing funding to creators for them to continue to advance with their creators and fund their creator activities. And if we believe and I'm a big believer on the creator economy, we also need to extend this capability of kind of like having financing to creators, which at the end of the day are kind of like the small startups. Some of them not as small. I mean, you
Mr.
see Mr. Beast is already, kind of like $1.5 billion worth in terms of his activities. So, I think that this is very, very exciting. Another regulations that you might see, I mean, you say that it's probably not new regulations, but enforcing regulation on Web3 and not just kind of like letting everybody do whatever they please. But do you see some other types of regulations as a consequence of FTX?
What I do believe is going to happen is the US regulators are going to take a look at what companies are doing from outside the US. So the problem with FTX was that they they hid with in the Bahamas and they operated an exchange out of there where there was very little regulatory oversight. So the SEC, I believe, will start coming in and warning investors about investing in projects from outside of your own jurisdiction. Because their rules are going to be less stringent than within the US. So I definitely see that as something is that there's going to become more rules around investing in companies from outside of the US if you're a US based investor. And I do see countries from outside the United States are definitely going to start improving their regulatory process. So I've been talking today about the United States, but countries all over the world are going to start taking a look at this, and they're going to start getting their regulatory process up to par with with what's happening with the US. So I definitely see that as being a big thing in the future.
And tell me a little bit about what kind of trends do you see with your customers? I understand that you are, providing finance to startups. Is it correct?
Yeah. So what we do, is we provide a platform where companies can raise venture capital without losing equity. So typically, an early stage company, they're a software company or whatever, and they're growing their business. The way that they would raise capital usually is through venture firms. and a venture capital company will take 30% of your business and give you cash to help you grow. But over time, as you go through all these various venture rounds, you lose, a big part of your company. So the statistics actually, show that on average, companies lose 80% of their equity by going through these rounds. So we set out to solve that. It's called equity dilution. It costs founders billions and billions of dollars. So we wanted to find a way to, as startup founders ourselves, to raise capital without loss of equity. So what RevTap does is we take companies that are already generating revenues, and we sell investors a share of those revenues that they receive in a form of dividends. So an investor would come onto the platform, they see a company that they like, they'd say, yes, I'll buy $1,000 worth of revenue shares. Every month they receive a revenue share dividend, and that has the potential to grow as the company grows their revenues. So for companies, it's equity-free venture capital. For investors, it's a way to invest in exciting early-stage companies.
Yeah, so that sounds very exciting, because it's a real problem that we're seeing with startups and with the dilution of the founders, and losing a lot of equity in the financing rounds, and then eventually the founders have very little of the company. Wendy, do you have any questions for Shane?
I do have a question. So I would like to know more about those users that are against regulations, because the idea of Web3 is decentralization, and same with Bitcoin. So some people are against this type of regulation. I'm not saying that is wrong. I'm just saying that is what people complain that they don't like about these new regulations that are coming, or the reinforcement of the ones that are already in place. So what would you say to those people that are against this type of regulation, because they said that it's against the principles of Bitcoin or the beginning of decentralization?
Yeah, absolutely. Bitcoin is all about decentralization, and I'm a big believer in in smaller government, decentralization, and regulations go against that. But on the other hand, you have bad actors out there who are doing things like what they did with FTX, which is basically taking investor money, saying that it's going to go into Bitcoin or whatever, but using that to fund their own business and their own lifestyle. And there has to be a bit of give and take. There has to be some way of protecting investors, and that's where some of these regulations come into place. And the bottom line is that if you're an artist and you want to sell a series of images or digital artwork that you've painstakingly spent your energy on, there's nothing stopping you. But once you begin to promise future return on that, once you go into delve into the world of securities, that's where there has to be a little bit of oversight, and there already is. It is designed to protect people, and that's the thing. So there is a bit of give and take. I am a believer in decentralization, but on the same side, I am a believer that the investors on our platform will need to be protected, or be assured that what they're investing in is legitimate.
And how do you achieve that, Shane, for your operation, where you are taking these startups that are needing of capital, and they are basically putting their revenues and future revenues as a promise for those dividends, and then you have on the other side investors? How do you achieve that balance between being decentralized to some extent and also protecting your investors and the companies that are in the platform as startups?
So I mean, for us, our underwriting process is sort of like the first piece, right? So a company would come in and say, we would like to raise capital. We put them through a process, much like, if you were to go and get a mortgage on your, to buy a home, the bank would put you through an underwriting process and take a look at your debt and your history and that kind of thing. So we do the same thing, but for companies, and we take a look at, their growth, their management team. We take a look at, their current debts, how much revenues they're generating, all that kind of thing. We put on a risk score, and we use that risk score to determine how much capital, they're able to raise and how much revenue sharing they provide in return. Then once we do that, we take that and all of the company financials are audited and then sent to the SEC, and the SEC takes a look at the offering and comes back with questions and that kind of thing, and in a period of about 30 days we end up getting approved, and that gets sold to investors. So that's how our process works to protect investors. At the same time, the fact is that we are a central, body. Like we're not a decentralized token. We are a company, but we are here to kind of, bridge two groups. We're bridging companies and we're bridging investors, and we need to protect both of them. And our reputation is what, makes companies want to raise on our platform and shows investors that it's safe to invest on our platform.
Yeah,
So
no, that's
I'm sorry, Ricardo. So do you think that when these new regulations or that is going to happen, we are going to have more people into the space, like the same when the internet started to be something in the 90s, when it was regulated and it has more protection, people felt more confident. So do you believe, what is your opinion about that?
Yeah, absolutely. I believe that, that the industry is still very early, and there's a lot of growing pains, and there's a lot of challenges. I mean, I was involved in Bitcoin from 2012, and we've seen so many issues and hacks and things that have made the industry more resilient. And over time, people are going to become more confident as the industry evolves. So I definitely think that right now today there's a lot of fear, and rightfully so, because of the media and what's the kind of fallout from FTX and BlockFi and these guys. But over time, it's going to end up working, to show people that there are processes in place that will prevent these kinds of things from happening in the future. So yeah, I definitely see more adoption, more companies using proper regulations. Then that is going to reassure investors. We're going to weed out the bad actors. We're going to weed out people that are just running fraudulent projects and that kind of thing. And what we're going to be left with are legitimate companies like RevTap and like others out there that are doing things the right way.
Yeah. Tell us a little bit about where do you see the future of this chain? We're early, but how do you see this evolving in the next few years? We basically have a few minutes left, and I would love to have your perspective about where all of this is going.
Sure. Yeah. I mean, I see, central banks getting into digitalized currencies in a big way. And that is going to really be the sort of the real push for, critical mass. And central banks want to do it because they want more control and being able to control the flow of money, and not just what people are spending on, but to actually be able to control the velocity of money going through the system and provide incentives to spend more at this point or spend less, and that's going to help in inflation or create deflation and that kind of thing. That's what governments want. The central banks, they want to be able to control the flow of money in the system. And so I see that as being the sort of the future over the next couple of years. That's what we're going to see, and we're going to see that bringing on a lot more adoption. We're probably going to see a lot of the protocols out there that aren't really adding value. We're going to start to see those go away, and I believe that blockchain will be more resilient, and the kind of the industry as a whole will be far stronger, and fewer of these bad actors in the space.
All right. Well, thank you very much, Shane. Do you have anything to add, Wendy? We basically have a couple of minutes.
No, I do love this conversation because it gives you perspective about regulation that is like a hot topic right now because of ETX. So that is very interesting to hear from, like, what is the balance, right? So thank you so much, Shane, for your approach about this, because I really enjoyed the conversation.
Yeah, and I also, I didn't know about, this market that, as you say, is much bigger than the public market chain. That is a great option for entrepreneurs, and the option that you guys have of, basically not non-dilution, but still be able to get capital to grow for startups. That's a great idea, and I hope that that becomes a big one, and helps founders not to be diluted as much during the early process.
Well, thank you very much. Yeah, we think so too, and we hope that we're able to provide companies with value and provide investors something exciting, and all the while kind of doing it the right way through the regulatory process. And we appreciate very much being invited onto the show, and thank you very much.
Thank you very much, Shane. Really appreciate it.
Appreciate it. Great to meet you.
Thank you. Bye now.
Metatech, the community of experts for the Metaverse, Web 3.0, and NFTs. Learn and be inspired by top industry leaders with your host, Ricardo Carreon. Together, we are building the Internet of Tomorrow. We invite you to join the Metatech experts community on LinkedIn, Twitter, and Discord.